She opens the renewal notice. Last year, $2,184. This year, $3,012. Same house, same coverage, no claims, nothing changed. The risk appears identical, but the number moves anyway. At first, this looks like a price increase. It isn't. It's a system response. A household earns $160,000 per year. After taxes, about $10,200 per month. Mortgage, $2,900, property tax, $600, utilities, $400, car payment, $750, food, $800, health insurance, $900. What remains is not unused income. It is already allocated. Remaining $3,828. Now add insurance. Home insurance rises from $182 to $251. Auto insurance rises from $220 to $310. After the increase, $3,669. The difference is $159. Nothing collapses, but the margin narrows. The system does not fail here. It performs exactly as structured. Because insurance is not a bill. It is a system that prices uncertainty. And that system is under pressure. To understand the pressure, we don't start with opinions. We start with signals. Insurance pricing rises sharply, then begins to stabilize. But something else does not. Repair costs continue upward. The surface stabilizes. The inputs do not. Now step back into the system. Premiums move forward. Claims move backward. Between them sits a network. Insurers, reinsurers, repair shops, medical systems, legal processes, regulators. Each translates risk into cost. When one part moves, the others don't stay still. Start with losses. Catastrophe losses exceed $100 billion again. Not one event, many. Storms, wildfires, secondary perils. At the same time, everyday claims rise. Repair costs increase. Medical costs increase. Claim severity increases. Losses begin to outpace what was originally priced in. Now the system responds. Prices move up. Coverage tightens. New policies slow. In higher risk areas, availability shifts. Policies begin to disappear. Not everywhere. At the edges. Risk is reallocated, and that shift carries cost. Losses rise. Prices follow. Coverage tightens. Policies move into residual systems. Those systems carry cost, and that cost returns back into pricing. This isn't a sequence, it's a loop. Now return to the household. The increase was $159 per month. It doesn't feel like a system. It feels like a bill. So behavior adjusts. Higher deductibles, less coverage, fewer small claims, and something changes quietly. The number of claims can fall, but the remaining claims become more severe, more expensive, which returns pressure back into pricing. This isn't a straight line, it's a feedback loop. Even when one signal improves, the system does not reset, it recalibrates. Some areas stabilize, others tighten further. Some absorb increases, others lose access. The system feels inconsistent because it's a network under strain. Back to the beginning. $2,184 becomes $3,012. Nothing changed on the surface, but underneath, the system adjusted. The numbers didn't move by accident. They moved through a system. And once you can see the system, you can see what's actually changing, not just the price, the conditions behind it.